business.
Personal income tax is tax levied on individual, including employees, partners, unincorporated trustees, families, and communities. Personal income tax is levied on a gradual basis depending on the level of income. When you look at personal income tax, some people earn below a certain amount and some earn, so much. Therefore, it is graduated. In Nigeria, most especially with our personal income tax law, we have a band rate of 300,000 for the first rate at 7%, and then we have the next 300,000 at 11%, and then graduated to when you earn next 500,000, it will be at about 15%, and then when you earn above another 500,000, it will be at about 19%, and then when you earn above 1.6 million, it goes to as much as 21%, and then if you earn above 3.2 million, it goes to about 24%. So this is graduated. And if you look at the average, it comes down to about 21% to 21.86%. Now, personal income tax based on Nigerian law for employees are remitted on a monthly basis. But if you do a direct assessment as an individual who is in business, you do a direct assessment and you must make your remittance annually before 31st of March of the following year. However, if it is monthly based on employee-employer, your employer must remit your payee by 10th day of the following month. There's a provision in the tax law to take care of those who earn below 300,000 or those who earn minimum wage. Now, people that earn between that range are subject to what is called the minimum tax, which is 1% of gross income. Company income tax is the tax levied on organizations who are into trade, who are into providing services, who are into production. So company income tax is very wide, and based on the Finance Act that we follow to guide most of our tax regulation, it has also further classified companies into small companies and medium-sized companies. So companies that earn turnover below 25 million are classified as small companies. And with these small companies, the company income tax is 0%. Now, companies that earn between 25 million and 100 million are classified as a medium-sized organization, and they are to pay 20% company income tax. However, organizations that earn above, in terms of turnover, 100 million are subject to 30%. It is 0% company income tax. It's a more of a relief so as to encourage a lot of small businesses to grow and become a big one. For an individual to minimize his tax burden on personal income tax, you need to look at what are the provisions that the personal income tax allows deductions for. You have the option you can buy a life assurance. A life assurance is deductible. You are also allowed to incur some expense that allows you to be able to carry out your job. These expenses are expenses related to you being able to carry out your employment responsibility. You are allowed to claim it. Another level of deduction is your contribution to pension. Is also a deductible expense that you are allowed. For companies to minimize their tax burden, there's several provisions you can take advantage of. You can claim capital allowance for any capital expenditure that qualify. There's something we call qualifying capital expenditure, which you can use to reduce the amount of your tax. Beyond that, if you also have experienced losses in the past, you can also bring forward your losses to reduce the amount of tax you will pay. And then there are quite a lot of liable expenses for you to operate your company. Some companies operate on debt. They use debt in financing their structure, and so they have to settle interest before that. Also, interest on mortgage, individual can use that. Also, interest on mortgage, companies can also take advantage of that. For me, it is important for every individual to be tax responsible. You have to participate in either way, whether low income or high income, because these incomes are very important to government to be able to give back in providing services to the public. And so it should be part of our social responsibility to make sure that no matter how little the income is, we still need to remit some amount of tax to the government. But I will tell you, generally all over the world, more tax are levied on those who earn more. And that is one of the challenges Nigerian tax system has faced over time. It seems that the focus of government has been on low-level income earners, and they've more or less low-level income earners have been the one that bears most of the burden. So, but other countries have been able to put enough structure in place to make sure that top 10 high-end people within the society pay largely for their tax. And we've seen statistics from South Africa and seen other nations who have been able to work more on their tax system benefit a lot from personal income tax. With all we have done, I'm not sure we've even been able to attain as much as $1 trillion in personal income tax, and in which if we structured it well and we allow those who earn more income to pay, then we will be able to have, government will have been able to generate more revenue on personal income tax. I'm sure with the level of the implementation of the Finance Act and the way most companies and individuals are getting to respond to it, one of the provisions allows that every individual and business owners, before they open a bank account now, you must provide a tax identification number. So also we need to be more strict with some of those things to ensure that every companies are actually accountable for the trade, and on whatever profit they generate, they are able to pay tax. Not that some areas are not properly captured and some are well captured. I think the gap in terms of database has been a major issue. So policy has to be around making sure that adequate information are being collated and are being stored in the right database that ensures that every business is well captured. The focus is becoming too much on the informal than the formal sector. And the formal sector, where all these big businesses and big investors who are earning huge incomes, needs to be captured. So also you've seen how technology has also changed the trend, and quite a lot of businesses are going on in Nigeria that source of the revenue is coming from Nigeria, but the income tax are not being paid in Nigeria. So with good regulation around technology, good regulation around gathering the right information, capturing the right data, and keeping the right database is going to really change the trend, and it will assist government to be able to make more revenue from income tax. It all starts from the way we capture information, the identity. How do you know the true identity of a Nigerian? We try to use the BVN at some point, the bank verification. We are trying to use NIN. So we need to have like a central way to really know who is who and who is actually involved in what. So if we know that, an average individual has interest in the following companies or have interest in the following trade, you will be able to trace and track this income and be able to generate the right tax on it. So I just want to encourage everybody to be tax responsible. Now, as much as we all feel that, We put in, but government is not giving us, as much as we expect. So what is the gain when if we all say we are not doing again, or we are not participating? Are we saying that we want everything to just dry up? So we just need to continue to encourage ourselves, and we will get the right set of people around our resources, and they will manage it right, and we'll get the right result. It has worked in other nations. It has worked across the world. It can also work for us. Like I mentioned earlier, there are quite a lot of tax deductible expenses. You can take advantage of those reimbursable expenses that you are allowed to deduct based on the tax law. Apart from that, you can also make sure that majority part of your income goes into your life assurance policy in terms of payment of premium, to protect yourself for future. Apart from that, you can also make contribution to National Housing Fund. You can make contribution to your national health insurance. These are ways you can reduce the amount of your personal income tax liability. If you also take a mortgage, interest on the mortgage is also tax deductible. So these are ways individuals can do that. And employers over time has also assisted by making payments in form of reimbursable to their staff as a way to also manage their personal income tax. For companies, I mentioned earlier, they can take advantage of the capital allowance through the qualifying capital expenditure. Those assets that has been only reasonably exclusive for the purpose of the business, you can claim allowance on them, to reduce the amount of tax you pay as a company. 2, if you have previous losses, you can carry it forward also as a way to reduce your tax liability. You are also allowed some other expenses in the process of making sure that you make contributions, you make some things to help the society to grow. You are pioneering a business that has never been, in place before, and you are the first to bring it to bear. You will be given some form of what we call pioneer relief, being the first to set up such a business.
iBrandTV, business first.